Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody was long today, right? Okay. Yeah. Oh, yeah. So, yeah, we had a lighter than expected or lower than expected inflation print. So we're back to that again, right? Anyways, so welcome everybody. Hopefully you guys are having a great day. Again, I just had a class yesterday. In fact, that worked out great. If you guys want to sign up for the newsletter, I am going to do another class in 2 weeks. Let's get right into it. So a couple themes here. Clearly, again, positioning, extreme bearishness, all that stuff I talk about here all the time. I've been writing about this on the weekends. Really kind of baffling to a lot of folks. We just had a banking crisis, so on and so forth. And here we are, the NASDAQ's up like 18% for the end of the quarter. But here's the thing. It's literally the four horsemen, as they remember we used to call those in the old days in 2000s, whatever. So the indexes are largely driven in the last quarter, I would say, by Apple, Nvidia. You get the idea. So it's all the mega cap technology that's about probably 30-40% of the S&P, and that's what's driving. You can clearly see on the charts, if you look at I actually just did this with my members this morning. Look at the chart of the NASDAQ relative to, let's start with that. So if you guys pull up your charts, look at the chart of the NASDAQ 100, the NASDAQ futures, and the relative to the January highs, we're almost 400 points above the January, the first high, the high we made back in January. In fact, we're almost close to the August highs. Okay. Now, contrast that with the S&P. S&P is about 100 points away from the Jan highs, right? That high is about 4,200. Contrast that with the Dow. The highs on that is about 35,200. In fact, we just got short here at TTS. We shorted, just in full disclosure, we shorted the mini Dow right at let's see, where did we short that? 33,450 is where we shorted that. Okay, so 33,450 with a fairly tight stop and a very small position. So we'll see what happens there. Anyways, so yeah, that's really what it is. Now going forward, starting next week, you've got resistance at 4186 on the S&P. There really isn't a level until you get up to that gap around 40. I think it's 40. What is it? They're still even rallying it even after hours right now. 42.21.50. So there's really not a lot of just a resistance level here around 4186 on the S&Ps, and obviously it's getting pretty extended. VIX is 18. Is it going to continue higher? Who knows? Could go higher, but I would be very careful right now not to chase. If you are long, we actually came in long SPY calls this morning and left money on the table. I have to tell you, I mean, again, in full disclosure, we were long the 404 calls in the SPY, and the thing went out at 409. So we did leave, but we left a few $100 on the table on that one. I got out way too early. it's just a classic, really. I think it's just a classic short squeeze. A lot of just, we continue to have that with algorithmic trading and so forth. So, again, that's really what it is. So, just to kind of summarize, the S&P made the low early March 30, after the banking crisis low 38.50. The highs are now, we're back up to the highs of the trading range. And so in a nutshell, we are essentially just essentially have this big, massive trading range. After it's all said and done, we have we're basically just right back up to the top of the range, right around 4,200, 4,100. I mean, if you go back, we go back to September highs, we go back to December highs in the S&P. So at the end of the day, that's really where we're at. What's going to change things? I really don't know. I mean, there's just a lot of internal rotation going on as well. The banks haven't done well. It's all technology. So the opportunities are, obviously buying low, selling high still. And then internally, you got to pick your spots. A lot of stocks are in range. If you go, actually, I did this with my members as well, going through a list of, maybe 50 stocks. They're all range trading, right? Other than the usual suspects. Technology's done really, really well off the bottom, Google and Amazon, Microsoft, and so on and so forth. So anyways, that really kind of sums it up. Obviously, we ended up the quarter very strong on the indexes relative to the beginning of the quarter. But overall, if you take the lens back out, 6-7 months, we have made zero progress. In fact, the S&P again, go draw a line all the way across, and we're sitting kind of mid top of the range from even all of last year. So that really kind of sums it up. Okay, so it's going to be interesting how we come in next week. We got a shortened week. We got Good Friday, I believe, so markets are closed on Friday. We've got more employment data next week. We got the start of the earnings season coming out the following week. So going to be interesting. I personally do not think we're going to get out of these trading ranges until the Fed stops hiking, which clearly they're not. Even though we had a really benign inflation number today, inflation's still running about 6%. So that's nowhere near the 2%. And so, but again, it doesn't matter what you think or whatever. It's market dynamics, right? That's the only thing that matters at the end of the day. So, okay. All right. So bonds really quiet, all kind of in a range now. If you look at the 10-year, bonds are kind of very, very quiet, which I think is also helping with the stocks, right? And so, we still, I don't think the bond market's done yet. And I still believe, there's maybe still, even though everybody believes that the banking crisis is over, I don't think we're out of the woods on that yet. There's going to be one last shoe to drop. That FRC, that First Republic still hasn't, that's the one kind of still lingering doubt out there, and who knows how that's going to play out. So bonds, not a lot going on, 113.14, 116 roughly on the bond market. Okay. Dollar also very range bound, keeps holding around the 102, and it's looks like it's also starting to put in a range 102 or 103. Currencies just chopping around, not a lot going on there. Peso almost tracking the stock market. I've been talking about the peso quite a bit. So we did have a short out on the peso, but I did actually pull that. That was a good thing because that would have been a stop up, but there are some levels up top. And so not a lot going on. Gold still continues to hit for 2000, pulls back. That's interesting today, because that's been almost like a hedge, but it still is elevated. So that's, I don't know, that could be a tell. Still, if you hit that thing at 2004, I think we shorted that. I think I mentioned we shorted that. We also were long oil, and we got out of those today. Oil is hitting a daily supply, daily distribution right around 76. It also is kind of tracking the stock market. If the market pulls back next week, oil should put it back. There's some really nice levels down around 70, 72 for buy in the oil market. Nat gas, not a lot. It did kind of have a little bit of a surge today, but still 225 is, I think, if you look at 225, it's still nothing there. We need probably a gap. We need to really get some momentum going there. So we'll have to see how that goes on that gas. And we had a grain report today, which really created some volatility, especially in the soybean market. Let's see, Jim, UCO 260, $260, huh? Not sure what you 260 looking for 80. Oh, you mean you bought calls on UCO? Not sure what you mean. Well, yeah. Basically, you look at the range we've been playing is basically, first it was 70, 70 to 80, 82. Then it broke down. 65 is where we bought oil, and now it's at 75. But it's got some daily, it has a daily level. If you look at the oil futures, Jim, look at there's a level 75, 70. Let's call it 76 to 78, right? So it's going to be really interesting to see if we can actually, hold that. And if we do, then we go back up to 80, 82. Yep. So it's going to be really fascinating to see how that goes. Okay. So we'll have to see how it's going to be. Now that we've got pretty much the quarter over, we start over again. And a lot of this, by the way, too, just to kind of recap again, we have a this window dressing stuff. Where a lot of fund managers and hedge funds, they see the market rallying like in the last couple of days, and they're underinvested, and so that kind of feeds on itself, and so that's really what's going on, and that kind of just that snowballs, and you get like this short covering and FOMO and everything else. So that also works against the shorts as well. But once that is kind of wrung out of the system, then you get back to fundamentals, and back to interest rates and the Fed and everything else. So it's going to be interesting. Next week is going to be really fascinating, and always exciting, and opportunities obviously bound. So and then again, mentioning the VIX at 18. Look at the VIX at 18. Is it going to be different this time? I don't know. Perhaps we get, perhaps it goes a lot lower this time around. That's you never know, right? So, but pretty much 18, 17 has marked every kind of top of the range in the last 6, 7, 8 months. So we did close close to 18 and a half. So that's going to be something to monitor as well, and see if that actually marks we're getting probably, see if that gives us another signal that overall, just signals a lot more complacency. Um, that doesn't always necessarily mean that the market has peaked, but it's actually worked pretty well in the last, I would say, 12 months or so. So that's something also to check out. So yeah, that pretty much sums it up, everybody. I mean, I really don't have a whole lot. Watch 4,200, top of the range on Nasdaq, on the S&P. Nasdaq obviously powers ahead. There is a level just to finish up here, 13,400. Take a look at that if you're so inclined to short the Nasdaq. Russell, I'm not looking at Russell shorts until about 1900. That also got a little bit today as well. That's obviously been very, very, kind of underperforming, and really nothing, that's kind of tied to the banks and so forth. So, but yeah, lots of rotation under the surface. Still, technology is driving most of this. If you go through your bunch of stocks, you can see that most stocks really aren't doing that much. It's just, again, it's just the technology sector that's pretty much driving the whole cart right now. Okay, so with that, have everybody have a great weekend. I will see you next Tuesday. Going to be start of a new quarter, earnings season coming up, and we'll see. We'll see how that goes. So. Hope everybody has a great weekend. And if you want to come and spend 5 days with me free, just go ahead and hit the links below. I did a class yesterday about options. In fact, if you guys signed up, I may start doing this. If you signed up for the class for yesterday and did not were not able to attend, hit support at Transparent Trading Solutions, and we'll send you the recording if you're interested. Okay, if you were registered for the class and you were not able to attend, we can do that. Okay, so it's a little bonus thing for everybody. Okay, all right, everybody, have a great weekend, and I'll talk to you next Tuesday. Take care.